Hi, this is Shane with the Rational Trader. It is Thursday the 6th, and we have a max loss day in oil here, minus 140. First one since I started doing Rev 71. It looks like we took a loss in gold as well here, so we'll take a look at both of these. I have not looked at them yet, so we'll do it together here. Oil today was the oil news day, which is typically on Wednesday. Today it was moved to Thursday because of the extra day off because of the National Day of Mourning for President Bush. And in days gone by, when oil was up at $100 a barrel and kind of traded between 80 and 110, this day would be I want to say hotly anticipated. That's not quite the right word. I knew people who would not trade oil news day, and the reason is that news report comes out and it would really move the market, and the volatility would go through the roof. I used to call it the Babe Ruth of trading days because Babe Ruth was known for holding the home run record, but he also held the strikeout record at the same time. And so this is, the Wednesdays in oil was basically you either struck out or hit a home run. It was kind of bipolar like that. So you either got killed or you made a killing is kind of the way it worked. So recently oil's been moving again. It had gotten so quiet for so long I just stopped trading it. And so we're seeing a lot of movement now, even though we're still down at, we're down in the low 50s. We're seeing decent movement now. It had climbed up to 70, so that's a pretty big move when you think about it. That's a $20 a barrel move off of a base of 50, so that's 40% of the price. Okay, so with that in mind, anyway, I've been trading it the last couple weeks now, and let's see what happened today here. Wow. So 8 o'clock is when the news was, which is right here. Now I have a news blackout in place. The system won't take a trade. That's why you don't see any yellow numbers here at 8 o'clock. So 7:55 to 7:05 is blacked out. Let's see. Did I take anything before then? Nice movement here. Wow. So here's the open. Ugly chop there. Now this here looks really normal for a news day. It used to be what I would do is I wouldn't trade the morning because it would be so quiet as everyone waited for the news report, because it looked like that. But this makes a nice move here, and then a bunch of nice moves actually. But none of them are in a location where we consider it a high probability. In fact, where are the edges? So you're coming into the day here. Remember, this is the open. You're coming into the day here with already a really big range. The value area is 52.33 down to 50. So 200 tick value area already. So you've got low volume node there and one there to work with, and so you can see finally as you work your way back up to there, the system starts looking for something to do. Doesn't find anything in this case, and then we get back into the volume no man's land. Down here we get close, but not close enough. Just not enough. There's not enough price action there close enough to that low volume node to find something. Same thing here. Finally, we get something that is generating an actual prediction. We don't take that trade short. Okay, so we get long here on this move back to the low volume. I'll take a 7 tick loss there. So we're halfway to our max loss now. And now 8 o'clock shows up. So this happened when? This was 7:30. So plenty of time. I used to get nervous when a signal would show up. My blackout's at 7:55 and the signal shows up at 7:54. Do you take it or not? That kind of thing. So then the market's going to go berserk. Okay. We're still in just the first couple minutes here of the news report. All right, and so 8:05 is there. So now it's legit. and we try to get short there, and you can see the vol is actually correct in terms of what's going to happen, but the volatility is too high here. So we get taken out, and then I'm done for the day. All right. Get a nice fall there, actually. Okay, so that is, let's take a look at, this is oil still, so let's take a look at how we've done from the beginning now. So from 1126 here when we started Rev 71, plus 810 after today's loss. I actually like, kind of what I was seeing here. This is actually better, almost better than I'm expecting, because really what we're looking for is, I don't expect steady small gains every day. That's kind of not the way the markets work. I expect to kind of just kind of stay in the game until you hit a home run. Stay in the game until you hit a home run. And this was actually fairly nice here. These are fairly steady, pretty decent numbers actually as well. Okay, so let's take a look at gold. Let's close that. So gold minus 70 today. So that means we took one trade basically and got stopped. You can see it right there actually. So here's the open. There's some nice activity here, but we're not taking those long. And then this ugliness here, and that's kind of what we get caught in. So shorting at the value area edge, that's a nice looking short to me actually. It's trying to go higher and failing, and then you're breaking through. As it happens, it's either a little too early, or it's still kind of choppy and ugly here. So, and then we just stay out of trouble the rest of the day. It gets quiet. I'm trading this, and what am I trading this to? I'm trading this through. Where is it? 1140. Yeah, that's right. Yeah. I might consider stopping that soon. I'll have to do some analysis, but I was having a conversation with, or an email dialogue with one of the newer members about, sort of when is the trading times for each of the markets. And there used to be a pit. There isn't a pit now, but even the markets still seem to follow those pit times, at least for starting. Like the gold pit used to close at, I think it was like 10:30. And so I was, you can see how the volume drops off here. What we need is a 1 minute chart with the volume on it to see when it drops off, and that's kind of your signal. But I also can run a bunch of replay analyses on it as well. In any case, a loss there today. Let's take a look at the activity log. So this is, all right, so this is just G9 because it rolled over mid last week. So we're minus 140 running PL on G9. And this week started here. So this week we're minus 100. All right, so minus 130, minus 70, and then plus 100, these three here. So altogether, for the last 2 weeks since we started, we are, whatever that number is, minus 140. Let's go see here. I don't remember. So 390 minus 140, so we're plus 250. Okay, so that's where we stand. Let's see what tomorrow brings. And what I like about this is that I'm not worried about it at all. I'm just going to just let the machine do the work. I don't really have to think about it anymore. Just make decisions on the weekends. And for me, I'm doing larger scale analysis on model architecture, and something I've been working on lately is we do a structured analysis process to identify the behaviors that work best in that particular market. But there's also this problem of interactions or combinations of codes. And so if let's say you have a code that your analysis shows does well getting long, and then you get long, and then a short code shows up. Now, the way that we trade, we used to stay with the trade that we're in, but what if it turns out that short code was the one you wanted? So I wanted to do some analysis on looking at different combinations, and the problem is that there is a lot of codes, and the number of combinations is too big. Though actually, as I'm thinking it here, I did that on oil. Oil has basically 15 codes each direction, which when you look at the number of combinations, 2 to the 15th is 65,000. Since you've got two sets of those, it's that number times itself. So it's 4 billion. There's too many combinations. But gold does not. Gold doesn't have a huge number set like that. So I think what I'll do, I've been thinking about how to solve that problem. I think what I'll do is take a look at the actual set of codes for gold is smaller. There's a larger set to choose from than what I actually chose. And so I think what I'll do is run that program for gold and see if it yields something useful. And if it does, then we'll have to figure out what to do for oil, because oil's got just too many codes to work with. So that's going to be the case in all cases where you've got a market that moves more. So gold's a quieter market, so there's less less behaviors to pick from. Okay, so let me think about that. All right, so that's it for today. I will see you tomorrow.